Hi there, a lot of talk lately about gold being pulled back into the center of the financial system. Not as jewelry, not as a collector's item, and not even as a trade, but as something much bigger. So, in this video, we're going to separate the myth from the mechanism, and you're going to walk away understanding why this metal still makes central banks, governments, investors, and entire empires act differently. Today is Friday, May 1st, New York time. Comment below what day and date you're watching from, because gold is not just moving on a chart right now, it is moving through history again. And if you value this kind of content, support the channel by subscribing and commenting John A.G. Best. That tells me you're here for the deeper breakdowns, not just the quick headlines. Now, the easy version of gold is simple. Price goes up, price goes down, people get excited, people get scared. Somebody says it's going to the moon, somebody else says it's a useless rock. Okay, fine. Markets always do that, but that is not the real story. The real story is that gold is strange. You can hold it in your hand today, and yet that same metal may be older than the ground under your feet. It does not rust like iron. It does not rot like wood. It does not fade like paper. It does not need a password, a server, or a government guarantee to exist. And that's where the story starts, because humans did not wake up one day and vote gold into value. They recognized it. Stone Age people found it in rivers. Ancient cultures shaped it into ornaments. Kings stored it. Temples displayed it. Traders accepted it. Armies stole it. Explorers chased it across oceans. So when people say gold is just a social construct, I think they're missing something. Yes, value needs belief. But gold has earned that belief across more languages, religions, borders, and political systems than almost anything humans have ever touched. That's not an accident. Gold is rare enough to matter, but not so rare that nobody can find it. It is soft enough to shape, but durable enough to survive. It is beautiful enough to attract attention, but chemically stubborn enough to outlast almost every empire that tried to control it. And that combination is powerful. It explains why gold ends up in mythology. The golden fleece, the golden apple, the king who wanted everything he touched to become gold, and then realized the blessing was actually a curse. Those stories are not really about metal. They're about desire. Gold has pushed humans to explore, build, mine, trade, sail, invent, and take risks, but it has also pushed humans into conquest, greed, slavery, looting, and war. So gold is not innocent. Gold is not evil either. Gold is a mirror, and that mirror shows us what people will do when permanent wealth is sitting on the other side of danger. Now let's get into money, because this is where gold stops being poetic and starts becoming dangerous to the system. Money has three jobs. It helps you buy things, it helps you measure things, and it helps you store value. Gold is not perfect at all three jobs today. If you're trying to buy coffee, pay rent, settle a tiny online payment, or send money instantly across the world, gold is clunky. It needs custody. It needs verification. It has weight. It has storage costs. It can be stolen. So no, I don't think gold is coming back as everyday pocket money in the modern world. But that does not mean gold is dead as money. It means gold's strongest role is not the checkout counter. Its strongest role is final trust. Gold is the thing people reach for when promises start looking weak. And that is why central banks never fully walked away from it. They talked like gold was outdated. They built a world of floating currencies and digital payment rails. They expanded balance sheets. They told the public that modern money had moved on, but they kept the gold. And recently, they have been buying more of it. Based on recently published numbers, total gold demand in the first quarter was a little higher than last year, but the dollar value of that demand jumped to a record level near $200 billion because prices were so much higher. Bar and coin demand was especially strong, while jewelry demand weakened because higher prices started biting ordinary buyers. That's important because it shows two different gold markets at once. The consumer says this is getting expensive. The investor says that's exactly why I want it. And the central bank says, I don't care about fashion demand. I care about reserve security. According to the latest publicly available figures, central banks still bought around 240 tons of gold in the first quarter, even while some countries sold into strength. That means the official sector was not just reacting to price. It was still treating gold as a strategic reserve asset. That word strategic matters, because central banks don't buy gold the way retail traders buy a breakout. They are not trying to flip a coin by Friday afternoon. They are thinking about sanctions, reserves, liquidity, trust, domestic politics, and what happens if the next crisis is not just financial, but geopolitical. And this is where the dollar comes in. The dollar is still dominant. Let's be very clear about that. Anyone telling you the dollar is gone tomorrow is probably selling fear. The dollar system is deep, liquid, legally embedded, tied to trade, tied to debt, tied to commodities, and tied to American power. But dominance is not the same as invincibility. Recent reserve data still puts the dollar around the high 50s share of global foreign exchange reserves, with the euro far behind in second place. So the dollar remains number one, but the world is clearly aware that reserve assets are not just about return. They are also about control, and control is the issue. If your reserves are inside someone else's political system, then your reserves are not purely yours. They can be frozen, they can be pressured, they can be turned into leverage. Whether you think that is justified in certain conflicts or not, other governments saw the message. And gold suddenly looks different. Gold can still be seized if it's stored in the wrong place. Let's not pretend otherwise. But gold itself is not another country's liability. It is not a bond. It is not a database entry. It is not a promise to pay. It is settlement. That's why repatriation matters. That's why custody matters. That's why vault location matters. And that's why countries that once seemed comfortable holding reserves abroad now want more physical control. Now, China is the part of this story where everyone wants the dramatic version. Officially, China reports a little over 2,300 tons of gold, and recent updates show the central bank has been adding small amounts month after month. Gold still makes up only a single-digit share of China's official reserves, at least based on the reported number. But there is the reported number, and then there is the question everyone keeps asking. How much gold does China really influence, own, or control when you include mining, imports, domestic buying, state-linked activity, and private accumulation? We don't know. And anybody pretending to know the exact number is probably pushing a story harder than the evidence allows. But here's the key. China does not need to announce some giant hidden mountain of gold tomorrow for the gold thesis to matter. Even slow accumulation changes the balance over time. A few tons here, a few tons there, month after month, year after year, while the world argues about interest rates, quietly changes the foundation. The dramatic claim is that China could one day reveal more gold than expected and challenge confidence in the dollar. Maybe. But the more realistic point is subtler. China wants options. Gold gives options. It gives a reserve asset outside the dollar. It gives credibility in a world where trust is fragmenting. It gives leverage without needing a speech. That is more important than a headline. Now, the United States still has the largest official gold position. Recent reserve tables show huge amounts sitting in deep storage at Fort Knox, West Point, Denver, and a smaller portion at the New York vaults. Add it up and you're talking about roughly 8,000 tons. That sounds enormous, and it is. But compare that with federal debt, annual deficits, interest costs, and the size of the modern financial system, and you start to see why gold creates such a strange debate. If gold is marked at an old official book value, it looks almost symbolic. If gold is marked at market value, suddenly people start asking whether it could be used, revalued, pledged, audited, or politicized. And that's exactly why gold is never just a metal. It becomes a political question. Because gold exposes debasement. It exposes whether money is being stretched. It exposes whether wages are truly keeping up. It exposes whether asset prices are rising because productivity is booming or because the measuring stick is shrinking. From long-running inflation data, consumer prices have climbed massively compared with the early 20th century, and even recent readings show the index continuing to rise. That doesn't mean every year is the same, and it doesn't mean gold rises every month, but it does show why people keep searching for a better long-term measuring stick. Gold is not a perfect inflation hedge over weeks or months. This is where we need to be honest. Gold can get crushed in corrections. Gold can frustrate investors for years. Gold can fall when real rates rise. Gold can move against the narrative at exactly the moment everyone thinks it should move with it. So if someone tells you gold only goes up because money printing exists, that's too simple. But over long periods, gold does something fiat currencies struggle to do. It preserves purchasing power without requiring a board meeting. And that's why gold is political. Not because gold votes, because gold limits. A government can issue debt, a central bank can expand liquidity, a legislature can promise benefits, a currency system can absorb deficits for a while. But gold just sits there and measures the damage. No speech, no campaign, no press release, just a price that eventually asks how much trust is left. Now let's talk about gold, silver, and Bitcoin, because this is where people love picking teams. Historically, silver was the transactional metal. Smaller payments, daily commerce, the cash side of the bimetallic world. Gold was bigger wealth, reserve wealth, settlement wealth. Bitcoin is different again. It moves faster than gold. It crosses borders more easily. It doesn't need armored trucks or a vault receipt. So for payments, Bitcoin may be better. But gold has a different strength. Gold does not need a network to exist. It cannot be hacked by artificial intelligence. It does not care about quantum computing. It does not require electricity, a seed phrase, an exchange, or software updates. Gold has physical risk. Bitcoin has digital risk. They are not the same asset, and they don't have to be enemies. If you're successful, share your success story in the comments so others can stay motivated. And tell me this, do you see gold and Bitcoin competing, or do you think they solve completely different problems? Now, what about tokenized gold? This sounds perfect on paper. Take physical gold, put it in a vault, issue digital tokens, and suddenly gold can move like modern money. But then the boring questions show up. Who holds the bars? Who audits the vault? Can ordinary users redeem? What happens if the custodian fails? What happens if a government changes the rules? So tokenized gold may grow, but it does not remove trust. It relocates trust. And that is the whole problem. Gold's greatest strength is that it is nobody else's promise. The moment you wrap it in a promise, you bring back the thing gold was supposed to protect you from. Now, gold and war. This part is uncomfortable, but it matters. Gold has started wars, funded wars, and been stolen in wars. Armies don't march past the treasury and say, no thanks. They take the reserves because reserves are survival. But sound money can also limit war. If a government has to fund conflict with real savings, real taxes, or real metal, the public feels the cost faster. If that same government can borrow, print, and spread the cost through inflation, wars can last longer than the population would otherwise tolerate. So gold does not make humans peaceful, but fiat can make conflict easier to finance. And once you understand that, you understand why gold keeps returning when geopolitics gets ugly. When reserves are frozen, gold becomes attractive. When sanctions spread, gold becomes attractive. When countries doubt each other's promises, gold becomes attractive. When debt gets too large and trust gets too thin, gold becomes attractive. So what happens next? I don't think we wake up tomorrow in a full gold standard. I don't think people start buying groceries with coins. I don't think every gold-backed token becomes the new world currency. But I do think gold is being pulled closer to the core. Not loudly, quietly, through central bank reserves, through Asian bar demand, through repatriation, through higher market value, through dollar diversification, through the fear that the next crisis may not be solvable with another policy statement. And maybe that is the cleanest way to understand gold. Gold's future is its past, store of wealth, unit of account, final settlement, neutral reserve, physical money outside the system. Gold is not productive like a business. It does not innovate. It does not pay you a dividend. It just endures. And in a world where everything is leveraged, digitized, financed, politicized, and constantly updated, endurance becomes rare. And one more thing. Gold doesn't have to win every argument to matter right now. It only has to remain credible when other assets are suddenly questioned. That's why the quiet bid underneath gold can be more important than the loud arguments above it. So before you dismiss gold as old, ask yourself this. If the modern system is so strong, why do the most powerful institutions on Earth still hold the one asset that belongs to no issuer? That is the question, and it's not going away. This content is for education and perspective only. I'm not telling you to buy, sell, or hold gold, Bitcoin, silver, or anything else. Markets can humble anyone, especially when emotion gets involved. So do your own research, understand your risk, and make decisions that fit your own financial life.